हेलो फ्रेंड्स, वेलकम टू द चैनल कासा बैंकर। दोस्तों, जेआईबी के सर पे इस चैनल में आप सभी का फिर से स्वागत है। दोस्तों, आने वाली 16 तारीख को अकाउंटिंग फाइनेंशियल मैनेजमेंट फॉर बैंकर्स का पेपर है। उसी के अंतर्गत मैंने ये वीडियो बनाया है जिसमें कि आपको वन लाइनर्स के रूप में कुछ इम्पोर्टेंट मटेरियल मिलेगा। तो दोस्तों, आप इसको आराम से ईयरफोन लगाकर आसानी से सुन सकते हैं। मैं काफ़ी आराम से इसको आपको एलेबोरेट करूँगा। मैं थैंक्स टू मुरुगन सर कहूँगा जिन्होंने इसको शॉर्ट नोट्स के रूप में अपनी वेबसाइट पे डाला हुआ है। बहुत ही अच्छा मटेरियल है। बस इसको मैं आपकी सुविधा के लिए, केवल आपकी जानकारी के लिए और आपकी नॉलेज के लिए इसको बना रहा हूँ, ताकि आपको एक ईज़ी हो जाए। चीज़ को मैं ईज़ी करने की कोशिश कर रहा हूँ। ये पीडीएफ में अवेलेबल है। बिल्कुल, पीडीएफ पढ़ने में कई बार हमें दिक्कत होती है, तो उसी के अंतर्गत मैंने इस पीडीएफ को पूरा ऑडियो में कन्वर्ट करने की कोशिश की है। अगर आपको अच्छा लगे मेरा ये प्रयास, तो मुझे मुरुगन सर का बिल्कुल ज़रूर ब्लेसिंग्स मिलें, और साथ ही साथ आप सभी का और अगर आपको अच्छा लगता है तो आप सब्सक्राइब करें चैनल को। तो दोस्तों, शुरुआत करते हैं। ये पहला है एएफएमबी पेपर का पहला मॉड्यूल ए है अकाउंटिंग प्रिंसिपल एंड प्रोसेस। इसका यूनिट 1 है जिसका नाम है डेफिनेशन, स्कोप एंड अकाउंटिंग स्टैंडर्ड्स इंक्लूडिंग IND-AS, इंडियन अकाउंटिंग स्टैंडर्ड। तो शुरुआत करते हैं। अकाउंटिंग इज ऑफन कॉल्ड द लैंग्वेज ऑफ बिजनेस, बुक कीपिंग and accounting not one and the same. Bookkeeping means recording the business transactions. Accountancy means compilation of accounts in such a way that one is in a position to know the state of affairs of the business. Accounting is language of business to communicate the result of business operations and its other aspects. Accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are in part at least of financial character and interpreting the results thereof. आगे देखते हैं। अगला है, नेक्स्ट वन इज डेफिनेशन एंड स्कोप ऑफ बुक कीपिंग। व्हाट इज द डेफिनेशन एंड स्कोप ऑफ बुक कीपिंग? Bookkeeping is merely recording the business transaction in books and ledgers. Point number 2, accountancy is wider concept, compilation of accounts in such a way that one is in a position to understand state of affairs of business. Point number 3, users of financial statements are income tax departments, ST departments, shareholders, investors, banks, and FIs, and so on. Point number 4, it is in the interest of all that financial statements reflect true and fair view of state of affairs of a business entity. Next heading is accountancy involves. What accountancy involves is systematic classification of business transaction in terms of money and financial character. Second, summarizing. It summarizes what? Trial balance and balance sheet. Next is interpreting the financial transactions. Next heading is financial statements. Manufacturing accounting, trading account, profit and loss account, balance sheet, funds flow, cash flow statement. These are the financial statements. Now, next heading is purpose of accountancy. The purpose of accountancy is, first, to keep a systematic record. Second, to ascertain the results of operations. Third, to ascertain financial positions of business. Fourth, to facilitate rational decision making. Fifth, to satisfy requirement of law and useful in many aspects. Now, next heading is basic objective of accountancy: to provide information to various users. So who are those users? First, income tax authorities. Second, sale tax authorities. Third, shareholders. Fourth, investors. Fifth, business associates. Sixth, directors. Seventh, banks for lending purpose. Now, what is the purpose of accounting? The purpose of accounting is to know the profit and loss. Second, to know the financial position and liabilities position. Third, to interpret the financial position. Next heading is objectives of accountancy. What is the objective of accountancy? The objective of accounting point number one is to keep a systematic record. Second, to ascertain the results of the operations. Third, to ascertain the financial positions of business. Fourth, to facilitate rational decision making. Fifth, to satisfy the requirements of law. Next heading is what is the advantages of accountancy. So first advantage is for economic decisions. Second is to provide information to investors. Third is to compare the financial position. Next heading is what are the types of accounting. The types of accounting are first financial accounting, second cost accounting, third management accounting, fourth social responsibility accounting, fifth human resource accounting, and sixth inflation accounting. Now, what is the concept of accountancy? The first concept of accountancy we understand is cost concept. So under the cost concept, first point is business transactions are recorded in books at cost price. Second, fixed assets are kept at cost of purchase and not at their market price. Every transaction is recorded with present value and not any future value. Unrealized gains are ignored. Cost of an asset that has long but limited life is systematically reduced by a process called depreciation. But such depreciation has no relation to market value of asset. Second concept is money measurement concept. Every transaction is measured in terms of money. For example, production, sales, wages, etc. all converted to money. Second is inflation or deflation not included in value of any asset. Now, third concept is business entity concept. This concept separates the entity of proprietor from the business transaction. Capital contributed by the owner is liability for business because business is different from owner. Any money withdrawn by proprietor is drawings. Profit is liability and loss is an asset. All entries are kept from the point of view of business and not from owner. An enterprise is economic unit separate from owner. Next is concept is realization concept. This concept tells us when revenue is treated as realized or earned. It is treated as realized on the date when property in goods passes to buyer and he becomes legally liable to pay. No future income is considered. Goods sold on approval will be included in sales but on cost only. Next concept is going concern concept. Business is a going concern and transactions are recorded accordingly. If an expense is incurred and utility is consumed during the year, then it is treated as an expense. Otherwise, it is recorded as an asset. Reserves and provisions are created for any future liability. Deferred revenue expenditure is written off over number of years. Why loss is shown under asset side? Next concept is dual aspect concept. Every transaction has double effect. Accounting equation that asset is equals to capital plus liability. Next concept is accounting period concept. Business will run through long period, hence counts of each period is recorded. Results of operations can be known precisely only after business ceases to operate and entire assets are sold and entire liabilities paid. But one is interested in knowing periodically operating results of business, say yearly or half yearly or quarterly. Hence, All the expenses or income during this accounting period has to be taken into consideration irrespective of whether they are realized in cash or paid in cash. Accounting for full disclosure. Disclosure of material facts. Material and immaterial fact is matter of judgment. Contingent liability. Market value of investments. Convention or principles of conservatism. All possible losses to be taken into consideration and anticipated profits to be ignored. Creation of provision for doubtful debts. Value of stock. Convention of consistency method of depreciation. Double entry system. Double entry system is scientific system. Every transaction has two aspects. Crux of accountancy is to find out which two accounts are reflected and which is to be debited and which is to be credited. Journal. So what is journal? Journal records each and every record. But to find out a transaction affecting a person, expenses account or asset, one has to turn over all pages of journal. Hence, transactions are posted from journal to particular pages of ledger, and journal contain a column LF. Cash book. Cash book keeps record of all cash transaction, that is cash receipt and cash payment. All receipts are recorded on right side and all payments on the left side. Cash book is a book of original entry. Record keeping basis. Recording. Journalizing as and when transaction takes place. Journal is book of original or first entry. Classifying all entries in journal or subsidiary books or posted to ledger account. Posting to find out at a glance the total effect of all such transactions. Ledger is book of secondary entry. Summarizing. Last stage is to prepare the trial balance and final accounts have with a view to ascertain the profit or loss during particular period. It is accountancy to use to and by while posting ledger. Balancing an account means equalizing two sides. If debit side of account exceeds credit side, difference is put on credit side and it is said to have debit balance and vice versa. Adjusting and closing entries. While preparing trading and profit and loss account, all expenses and income for the full period are to be taken into consideration. If expenses have been incurred but not paid during that period, liabilities for unpaid amount should be created before the accounts can be said to show the actual profit and loss. All expenses and income should separately be adjusted through accounting entries. Trial balance is prepared from the books of accounts of organization. Final accounts are the final process of accounting. Once the trial balance is prepared, the books are halfway closed. Now all adjusting entries passed at the time of preparing the final accounts have dual effect, that is both debit and credit. Hence all adjustment entries passed after trial balance and drawn will have two effects, one in either trading and profit and loss account and other in the balance sheet, or one in trading account and other in profit and loss account. Some examples. Closing stock adjustment will be shown in asset side of balance sheet and will be shown in credit side of trading account. Goods lost by fire will be shown in credit side of trading account, will be shown on debit side of the profit and loss account. Outstanding expenses will be shown in debit side of profit and loss account, will be shown in liability side of balance sheet. Prepaid expenses. Prepaid expenses shown in asset side. Debit prepaid expenses and credit and P&L expenditure as they do not pertain to a current year. Depreciation. It is fall in value of asset due to use or passage of time, depreciation debit to asset account. Accounting standards. Institute of Chartered Accountants of India recognizes the need to harmonize the diverse accounting policies and practice constituted on Accounting Standard Board in the year 1977. ASB formulate accounting standards so that Council of ICAI may mandate such standards. Day book and GLB posting in a bank. The general ledger balance is virtually trial balance of the bank on a particular day. It reflects the balances of all accounts. While preparing balance sheet and profit and loss account branch of bank, the GLB balances are taken. Balance sheet of all branches together when considered becomes the balance sheet of the bank. Generally accepted accounting principles. The common set of accounting principles, standards, and procedure that companies use to compile their financial statements, GAAP, are a combination of authoritative standards set by policy boards and simply the commonly accepted way of recording and reporting accounting information. GAAP are imposed on companies so that investors have a minimum level of consistency in the financial statements they use when analyzing companies for investment purposes. GAAP covers such things as revenue recognition, balance sheet items, classification. Companies are expected to follow GAAP rules when reporting their financial data via financial elements statements. That said, keep in mind that GAAP is only a set of standards. What is important that its underlying objectives are followed in true perspective. Some of the important accounting standards are AS1 disclosure of accounting policies, AS2 valuation of inventories, AS3 cash flow statements, AS4 contingency and events occurring after balance sheet, AS5 changes in the accounting policies, AS6 depreciation accounting etc. तो यहाँ पर दोस्तों हमारा ख़त्म होता है यूनिट 1। तो ये जो नया प्रयास आपको अगर अच्छा लगा हो तो आप इसको लाइक करिएगा। Again, I thanks to Murugan sir for making such beautiful notes, and just I have tried to convert the PDF into the audio by file, and I will, if his blessings continue, I will update other units also. So friends, meet in next video. Bye bye, and do continue your study. All the best.